So, hello everyone. We are currently at the brink of the second wave of digital transformation. And this is truly a special time as banks, fintechs, and even the regulators are thinking about new ways on how to approach software development. Now, what we have learned is such transformation, at least when done in a certain way, doesn't need to involve too many resources or doesn't need to take a long time. Of course, it can when you are working with an improper partner or an inexperienced vendor. But generally, what we have found that if done right, such a transformation can be almost painless. My name is Maciej Sałata, and today I would like to tell you a few words. I would like to show you how composable approach towards software development can accelerate your digital transformation. Now, you may have heard that composable approach is actually one of the top technological trends for this year. You may have heard that this is one of the hot topics that will shape the future of digital banking and even customer experience. You may have also heard that composable approach is actually the holy grail for pretty much any IT guy. But from my personal perspective, I think that composable approach is something that is driving the second wave of digital transformation. This is like Joanna mentioned in her presentation. They are doing the second rebuild, and I think it's fitting to mention that this is actually what the second wave is all about, but to understand how it implies, how it actually implies the changes in market dynamics, we need to go a little back in time to the times of the Industrial Revolution. You know, before the Industrial Revolution, how value was created. There were craftsmen that were providing the services or products to the broader audience. And the markets, you could say, they were highly local. So they were selling mostly to the nearest neighbors. What was happening then is that value created depended highly on the skills of the merchants, skills of those craftsmen. So the market was highly dynamic in this point. Now, this all changed with the Industrial Revolution. When the machines became more commonplace, whoever had a factory was able to manufacture products at a much faster rate, much more cheaply. So this changed the dynamics. The dynamics became pretty low, at least much lower than before, because whoever had the factory pretty much had no competition. They were able to sell as much of the product as they produced. Now, of course, this couldn't last forever. That's why with the emergence of global supply chains and emergence of global markets, the change was that the entrepreneurs, they were no longer competing on a local market, but they were competing with competitors that they have never seen. Because they were coming from overseas, they were coming from everywhere. So whoever is able to adapt to this situation more quickly could win on the market. You could say that when it comes to key drivers of the industrial era, they were about cost efficiency, scalability, essentially about being able to manufacture a product efficiently and at scale. Now, for the post-industrial era, there were much shorter cycles, so products were developed in an agile way. This is, again, an analogy to what Joanna has said. You need to be able to adapt to the market more quickly. And effectiveness and speed, these were the things that started to matter. And this is exactly the thing that is happening in the IT world, in banking. Because previously, we could say that we had this industrial era IT. At the beginning of the 21st century, the changes that were introduced in banks were mostly about automation of processes, about speeding up of the existing processes. But this has been changing. And this is where composable approach enters the scene. Because when we are talking about a composable approach, I would like to explain you how does it differ from the standard implementation of monolithic solutions that we had before. Let's say that you are in the business of serving coffee. There are a couple of ways you can provide coffee to your clients. One of those ways is to use a monolithic system that was installed by a vendor. You could just put in some money, it would give your clients coffee. Okay, problem solved. The composable approach requires a little more involvement from your part, because it requires you to source different pieces of the puzzle, like electricity, water, provide a kettle, provide coffee, in order to achieve pretty much the same result. So you could say that in such approach, from technical perspective, we call all of those smaller components microservices. And in such approach, a microservice is a piece of software that is providing a certain capability. It has an API. In this metaphor, this will be the plug shape and voltage. So a couple of those microservices coupled together, right? You make an application out of all of those, but how does this address the need for speed that is required in the markets? Well, one thing is that when you have a monolithic solution, when you have monolithic architecture, and you want to introduce something new, you want to make a change, well, you better find another option, because monolithic applications are historically difficult to change, right? So let's say your clients want to have tea, in this example, so they would either replace the whole machine, or they would ask the vendor to make changes, right? Which would require time, which would require money. So in this approach, when we have a composable application, it's much easier. You just exchange one of the parts in order to provide value for your clients. So the first advantage of microservices is that you actually are able to introduce changes more easily. But secondly, you can have much more throughput when it comes to different teams that are providing value to your clients, that are working on those different modules of the software. So traditionally, in a monolithic approach, think about developing, for example, Microsoft Excel. You have a team of people, let's say 300, not very effective to manage. In microservice-based approach, you have multiple teams that are working on components together. They are forming the same application, but they are working in parallel, so they can work pretty much independently. So there you have it. One microservice can be taken care of by one team, by two teams. You can even plug in external teams. And this is something that allows you to scale, because you are no longer confined to the development force that you have. You can hire external developers, you can hire external companies in order to be able to increase the speed even more. Now, the third way, it's much easier to integrate such applications because they communicate via APIs. In monolithic approach, if you had a solution and there was, let's say, a regulatory change on the market, you would need to have, let's say, a certain library written in the same language that you were using for the development of the platform in order to provide those new capabilities. In composable approach, it's much easier because the applications communicate via APIs. It's no longer that important what is the technology running underneath, because it's much easier to install different pieces that will be just talking together to each other via APIs in such approach. So you can even, apart from having external developers, you can even integrate external solutions into the platform. We've been talking about those composable platforms. I wanted to introduce a real-life case study, how we are able to help our customers with such a platform. This will be about BNP Paribas, who came to us more than 2 years ago, and they said, okay, we want to build the best e-banking ecosystem for companies, meaning SMEs and corporations in the world. Of course, there were some challenges that we're facing. First of all, they had monolithic systems that were holding them back, so they wanted to introduce microservices. They wanted the system to be user-friendly. They wanted to provide more self-service to the clients so that they would no longer call the call center. They would just be able to do everything online. And last but not least, they had already a large customer base, multiple modules deployed for their corporate and SME clients. They also wanted to bring them to the platform. Same situation like ING was doing. So the one more thing that they introduced was the design thinking approach. So they wanted to involve their customers as well into the process. They were asking, okay, this is the way should we do it? How should we do it better? They were constantly asking and improving. They wanted to involve the customers as much in order to get them the best product. Already a complex scenario. Lots of things to cover, lots of things to migrate. So the natural question that comes to banks at this moment is to buy or to build. And there are, of course, no easy answers. But a couple of options are presented usually. First of all, if the banks want to have more control over the end solution, they would go for completely own development. But this is something that takes hundreds of people. It takes many years to accomplish. And usually, only the biggest banks can afford that. Second way was to use an off-the-shelf product. But again, they wanted to provide something unique to their clients. So they would have to pay a lot for customizations. They would have to adjust the solutions a lot according to the process that they had. And one more bottleneck, the solutions that are available on the market are usually monolithic, so they would still be caught in the same trap. The third option was to use local platforms. But again, since they were doing this in the SME and corporate banking space, the local platforms couldn't provide the building blocks that they were needing. They would essentially have to build all of the corporate processes related, for example, to trade finance completely from scratch. So they came to us. They asked us, OK, we've been cooperating for a long time. How you guys can help us? And we came to them with Comarch Open Platform. which we said, OK, we have those ready-made modules that we can give to you. We can also give you the tools that you can use in order to customize the platform according to your needs, so that you can spin up additional teams that would be able to extend the platform. This was based, of course, on the modules that we had, the microservice architecture, cloud deployment, and DevOps processes that we were supplying to them in order to introduce them to the world of microservice-based development. What were the results? First of all, the timeline for the project was accelerated. So it started in spring 2020. They introduced the first modules in 21. This is where they also started spinning up some additional teams for their own development. And in 2022, there were another modules introduced with the hope of finishing the project by the half of 2023. So already, we are talking about a very complex transformation that takes just 3 years. So it's very quick in the terms of how complex the project was, essentially specifically taking into account the products and customers that they had to migrate. More than that, they got a platform that was completely cloud-based. It was based on microservices. There were no bottlenecks when it comes to performance, because those different microservices, they can be scaled separately. There were no maintenance breaks. And finally, it was much easier to integrate fintechs. So such a platform will allow them to expand more quickly in the future. Now, to summarize, what I want to focus on are 3 main points that I would like you to take from this presentation. First of all, you need to really understand those post-industrial markets. Things are going to happen much more quickly. The monolithic applications that are holding you back, you need to leave them. You need to start building something new. The second wave of digital transformation, it's about implementing things faster. It's about easier integration. It's about quicker time to market. And it's also about reusing features. So as the first wave was more like this industrial era IT, where it was about implementing systems and then expanding them as cheaply as possible to get more margins, now it's more about IT merging with business. So they are no longer separate entities because they are driving the business together with the IT as an accelerator. Second thing, speed. Speed is much more important than perfection, because as banks, you don't know which of the trends is going to explode. So you want to be able to make bets. You want to be able, OK, bet on this one, this one, this one. These have to be cheap and fast bets because you don't know the future. You don't know what clients will like. So essentially what you want to become is a composable business, meaning a business where you do not have to build everything from scratch every time, but you can compose it out of ready-made components that you have already implemented that are just connected via APIs. And third thing, sometimes it's just easier to partner up to accelerate the process, because if you haven't done microservice development before, you don't know what it's all about. There is one more thing that I wanted to say, right? When we are talking about technology, we often think that this is the silver bullet that will solve our problems, let's say 1 quarter along the road. But the true power of technology is its transformative function. So you don't even realize what changes of technology that you introduce right now, how they will be able to benefit from you in the future. They will allow you to do things faster. They will allow you to adapt to the market more quickly. But this is not an immediate change, right? It's organizational, and it needs to happen organically. Such a platform, right? When you are thinking about such platforms, it needs to be positioned at the confluence of those 3 major forces that are driving digitalization. So the bank's IT, who are getting more and more responsibility, want to take more control. Fintech software vendors, such as Comarch, for example, who are able to contribute some pieces to the puzzle. And fintechs, if you want to integrate some external solutions into your solution without having to build everything from scratch. Now, if you want to find out more about the case itself or about how we can help you with that, please see us after the break. Thank you very much.